All right, everybody, we are back. Welcome to Blockhouse. Thank you so much to Dave Leibowitz and Lou Moan for joining me here today. And gentlemen, it's such a pleasure. Thank you for being here.
Thank you for having us.
Thank you.
Really excited to jump into it. And before we get into the crux of the conversation, I'd love for the audience to just get to know you both a little better. So, Dave, why don't you start us off? Tell us a bit about yourself and what you're working on.
Of course. Thanks for having me on, Will, and everybody on the Black House team. My name is Dave Leibowitz, better known as DeFi Dave. I am the head of growth of CAP. And at CAP, we are a credit platform, and we're backed by financial guarantees. We received our backing from Franklin Templeton, among others. We work with a ton of institutions who want to tap into the world of on-chain credit, not because out of their goodwill, but because it's more efficient to do so. So we can get into that more on the program.
I love it, man. I can't wait to. And Lou, same question over to you.
Lou Moan, I'm a managing principal at Franklin Crypto. Franklin Crypto is the investment management platform within Franklin Templeton that has a focus on investing in digital asset markets. My focus is on venture capital investing at the seed and Series A stage, and met Dave a couple of years ago and look forward to our discussion today.
I love it. And thank you guys again. I'm really excited for this conversation. So, Lou, I'm going to take this next question to you. We spoke about this a bit, but Franklin Crypto is an early backer of CAP. And I'm interested for you when you're evaluating an investment in blockchain infra or otherwise, what comes to mind for you? What's top of mind?
Well, first thing we look at is the capability of the team. Are they mission driven? Is there a passion or a problem that they're looking to solve that they feel like their design of that infrastructure has the potential to create network effects, give them a wedge into a market that would otherwise be impossible on either different forms of blockchain infrastructure or just non-blockchain infrastructure. We then evaluate the potential for network effects, and just time to market is also an important factor. I think we're in an interesting time for blockchain infrastructure where it feels like there is abundance of it out there, but things we're keeping an eye on as investors is where those networks seem to be concentrating and where the activity on chain is picking up.
I love that. And Dave, kind of the other side of that question for you, for CAP, what made Franklin Crypto the right choice or one of the best choices, I would say, as an investor beyond just the capital?
Oh, where can I start? I think for one thing, Franklin Crypto and Franklin Templeton, they've been in the space for a long time. Like people keep on saying the institutions are here, the institutions are here. No, Franklin Crypto has been here since the late 2010s. I remember they were, the first to come out with the tokenized money market fund. So they bring a lot of expertise. They bring an excellent network that they've connected us to a bunch of different parties over their time investing in us. So, it's been a pleasure working with them and, continue to look forward to working with them in the future.
It just overlooked is we aren't just investors in the space, we're builders as well.
I love it. No, if you guys want to touch on that a little bit, I would love to get into it.
What Dave alluded to around kind of our participation in on-chain markets was really around the stack that goes into supporting an actively managed fund strategy. There's a lot of technology that goes behind that, and often most of it was running on 30-year-old legacy database systems. We viewed blockchain as a potential enabler to bring new utility to investors.
I'm going to take it in a different direction here. As you were saying, Lou, and Dave, you were alluding this as well. People keep saying that institutions are here as if this is like new, but there's been folks like Franklin Crypto who have been here building and investing in this space for years. But we are seeing this emergence of the regulators beginning to really come into the fold, right? We've been seeing things like the Genius Act getting passed. Clarity Act is moving its way through the Senate, getting back into the House. And we've seen the SEC begin to make statements and prepare themselves for regulation. So I would love to talk a little bit, Lou, if you'd like to take this one first, about Hester Peirce's recent statements on crypto vaults and lending strategies. Would love to hear your opinion on that.
Sure. So I think this is really thematically a continuation from the commissioner's statement she made previously about tokenized stocks. And what she kind of said there was, look, just because there's a tokenized representation of something does not mean is exempt from securities laws that exist in the United States. she's walking along a similar path here with her statements. Franklin Templeton, as an asset manager, is effectively in the business of offering financial advice. So what she's unpacking here is, I think, honing in on the investment discretion associated with the strategies and how these vaults are deployed, and the security-like investment advice components that seem to be coming along with actively managed vaults. We are an active manager. We're attracted to this space because we see the potential for distribution of actively managed strategies on native blockchain markets. But I think she's basically saying, be careful. This looks like investment advice. So there may be a path to where this, again, intersects with the existing securities laws.
Dave, did you want to jump in on that as well? I see you nodding in agreement.
Yeah, no, Lou hit the nail on the head. What Hester Peirce, Crypto Mom, said in her statement was, just because you tokenize something on chain, just because these vaults exist on chain, does not escape the purview of the SEC and regulators. And in her, if you read her statement itself, it basically provided a framework from fully automated, immutable vaults that are built in the spirit of crypto on one side of the spectrum, and on the other side of the spectrum, we see these actually managed, human intervened vaults. And this is really important because we've seen time and time again what happens when these actively managed vaults go wrong. I mean, last year we had Stream Finance. Even years before that, we had Celsius and BlockFi and this and that. So this has been an important issue. And so it's great that Hester Peirce came out with a statement about that. There was a pretty in-depth discussion on Twitter about the statement and what constitutes as something that's more actively managed compared to something that's fully immutable. And then you see people and builders in our industry actually going to Washington, going to DC to discuss with regulators, to educate regulators. So I think we've come a pretty long way as a space, especially considering a few years ago how the tone of crypto was perceived in the country by regulators. So it's great to see on a higher level, it's great to see this progress and discussion overall, to see regulators and builders having this conversation with each other to build a better system for everyone.
I completely agree. And shout out to the trade associations like Chamber and Crypto Council for Innovation and Blockchain Association for really pushing that work forward. And it's really refreshing to see regulators take a stance that they want to welcome us into the country. Like the last SEC administration was a little bit different, but it's been a completely different wind. And I'm keen to see how things land with clarity. And it's a really exciting time for the industry. And it's an exciting time for CAP as well, Dave. I'd love to talk to you about, CAP's core structure. At the core is this credit delegation where there's a guarantee, and I'd love to hear you speak on this better. You'll speak on it better than me, but there's a guarantee from the underwriter that a borrower will properly manage their loan. And I'm curious why that structure matters here and how it's actually built to hold up under stress. Just based on the conversation we're having, and I'd love to hear your opinion on this.
Yeah, going off from our last question, we see actively managed vaults and anything that's actually managed with strategies. When they go wrong, it's, users are left holding the bad. And this is due to human error. This is due to people thinking they know more than the market. With CAP, we don't have that assumption at all. Instead of, us deciding the strategies, it's like, no, let's create a marketplace where people that have expertise in their given areas and put in skin in the game at the same time can come together, unite, and build a system that actually grows the pie for everyone involved. So who are the participants in the CAP system? Well, you have the depositors, you have the borrowers, you have the underwriters. And the credit delegation happens between the underwriters and borrowers. Credit delegation isn't something that's new. It's existed before, but no one's really put the tender love and care for credit delegation to be successful, especially on chain. And so in CAP system, instead of, trusting the borrower, the depositors merely trusting the borrower, it's the underwriters. They go ahead, they do the due diligence, they take on that work. And they actually vouch with their own capital, with their BTC, ETH, or gold, to the borrower in order for that borrower to access the underlying USDC in the CAP system. And we see a number of advantages with that system. I mean, for the borrowers, they're able to basically access an uncollateralized loan and grow their book. But keep in mind, in the eyes of the depositor, the loan is fully collateralized by the underwriter's assets. So if the borrower, goes ahead and runs off, it's the underwriter that's penalized, not the depositor. So this keeps the system solvent, whole, and able to grow and scale.
Wow. I have so many more questions for you, Van, but I wanted to
I have
go.
answers, but yeah,
Yeah,
go
no,
ahead.
I'm so glad, and I wanted to go, Lou. I'm curious on your side of the field. Some people would and do argue this is genuinely new. Others are saying it's a version of private credit that comes with better reporting. And I'm curious, if we were to take the blockchain away from it, is this private credit comparison fair to make, or is this something that private credit generally can't do without blockchain?
Well, I think there's two sides to that. One is an investment thesis where we're interested in how blockchain can make idle assets more productive. And the opportunity that the CAP team saw was an ability to interact with multiple sides of a marketplace where each side had needs and wants and try to match those needs and wants together in a protocol format. On the private credit side of things, I think the vast majority of the approach, at least speaking to the asset manager's perspective, is still a function of that. How can blockchain in the fund managing stack offer private credit opportunities to investors? And I think we're still in the experimental phase of these massive pools of capital in private credit markets that what on-chain doesn't necessarily solve is the liquidity mismatch, a team's edge in sourcing deal flow, and their ability to underwrite credit risk to generate, returns and limit default rates on that side of things. And, there's a lot that you can get into with collections and restructuring debt. That is still very much a TradFi dominated space. And ideas and protocols like CAP, I think, are just scratching the surface in terms of the ability to offer new instruments to on-chain investors that, really brings this kind of private credit-like construct to a new distribution channel and a new type of investor.
Yeah, to go on to with what Lou is saying, yes, there are a lot of similarities with private credit, but also I think there are a lot of things that are different. I think with primitives and platforms like CAP, what CAP does is actually democratizes origination and also enshrines enforcement. And what do I mean by that? When I say democratizes origination, with a lot of traditional private credit funds, you have a committee or group of people deciding where to allocate funds, and they're the ones bringing deals to the table and whatnot. In CAP system, we have different underwriters. They're bringing deals to the table, and each underwriter has a different agreement with the borrower. So this can scale much, much, much more efficiently than something in traditional private credit in the future. And when I say enshrine enforcement, well, in traditional private credit, if a borrower goes bust, that ends up in the courts for months or years. In CAP system, if a borrower goes bust, that is literally just a smart contract function away of like, boom, the underwriter's penalized, the depositors remain whole. And I like to say with CAP, the important stuff is on-chain, just like what I just mentioned. And the important stuff that's off-chain is off-chain. So the borrower and underwriter, they can go settle in the courts. Meanwhile, the depositors, the people that we want to protect the most, are made whole.
Wow, that's amazing. And everything's on chain. So
Everything's, yeah,
that's amazing.
exactly.
I want to keep going down this rabbit hole for a second, but I did have a question that is loosely on this note, Dave, which is I've noticed this trend where every crypto yield product right now is riding this very specific rate environment. And if rates were to come down and that spread compresses, does the entire category of on-chain credit still make sense? Or is the model only possible in the way that today's conditions are met? What are your thoughts on that? Because it's something that me and Mark have been talking about.
Yeah, well, CAP is actually built for environments such as low rate environments, because how CAP is built is you're always going to be marginally better than the T-bill rate. You're always going to be marginally better than the on-chain rate. And so if rates go down, well, what does that mean? It means it encourages risk appetite, and it encourages borrowers to come in and look for opportunities with the edge that they have. And they're going to need capital. And where are they going to get capital? Well, in places like CAP where they can get it uncollateralized. So it's actually a very favorable environment for platforms like CAP.
I love that. And Dave, I'm so curious. We've known each other for years in different circles, and you've always been a huge proponent for DeFi. You've been one of the biggest names in the space that advocates for it, educates for it. Um, Tell me about like your journey with Cap. Like, how did you start this company? What inspired it? Like, walk the audience through this new journey of yours.
Yeah. Yeah, so I've been in DeFi for 6 years, crypto for 9 years. When you're in it for this long, you really see how it's evolved and changed over time. And I joined almost a year and a half ago now. The thing with Cap is everybody a part of the team, we're all DeFi veterans. I like to call us the DeFi Avengers. Benjamin, the founder, started a stablecoin Chi. Our CTO and all our devs are from Beefy Finance, one of the largest yield protocols. And so we've seen the best of DeFi and how it can empower users and grow the pie financially for everyone. But also we've seen its faults, and we've also seen where it's went wrong. And how we think about things is we don't want to trust anybody. We would rather trust market incentives and people to act in their own self-interest to strengthen a system than just trust me, bro. And I think that's how you build in the ethos of crypto. That's how Bitcoin is built. Bitcoin is a proof of work marketplace, but it's Ethereum, a proof of stake marketplace. And so we're applying all that to basically yield. And so I joined Cap a year and a half ago. Ben asked me to join to come on as one of the early employees. And, I've like looked into the Cap system before. I've actually interviewed, back when restaking was a thing and I had my Flywheel podcast, I interviewed Sriram back in 2023. So I knew what this type of primitive was capable of. And it just completely clicked that yield was going to be the marquee use case, which it is. If you look at, 100%, 99, 100% of all, symbiotic or revenues, it is from Cap. And so that has been proven. So it's been an absolute pleasure to build and to continue to build this. And we're excited for what the future holds. And I like to say that Cap is the Uno reverse card to finance. And so, this idea of instead of DeFi coming off chain, trying to wrap its products and trying to fit into the rules of TradFi, no, how you're really going to grow DeFi is if TradFi comes on chain and they play by our rules instead. And that's what Cap is really doing, because what is exactly happening is you have these borrowers, the flow traders, the Susquehannas of the world, they're actually coming on chain to borrow stable coins from Cap, which has never been done before. And I think it's really cool. It gets me excited, and I hope it gets you excited too.
Yeah, I'm excited for you guys, man. It's awesome to see, and shout out to the team and to the folks that you called out, like folks like Sriram as well for pushing the space forward. And Lou, we're just meeting today, and it's been a pleasure. I'd love to get to know a little bit more about your crypto story as well. How did you get into the space, and how did you meet the Cap guys? Like, tell us about that story.
Sure. So I think my journey into blockchain came from a natural evolution of via the asset manager's perspective in how we can market investment products directly to consumers and retail, which is largely an untapped market in the United States. So we're talking mid 20 teens where the robo wealth advisory apps really came to market. I'm talking about Acorns and Wealthfront, and you know a product that really was serving an ignored segment of the population in terms of their ability to grow wealth. This then kind of evolved and specialized into blockchain. I think I made my first investment into Bitcoin, under $3,000. Unfortunately, paper handed it, but the potential of digitally native markets as opposed to just kind of layering in an ETF model portfolio to someone who's just starting their wealth accumulation journey, I think was powerful. And I think, the market views it as an accelerant. But I've been, committed to what I would describe as disruptive technologies to asset managers for the last 7 years. And blockchain certainly is one.
I love that. Disruptive technologies. Dave, you look like you wanted to add something. Did you want to?
Yeah. No, it's funny to think about my journey because I come from more of a humanities background. So the thing that's interested me the most about crypto and blockchain technology is the sovereignty aspect of it. How users can take control of their own funds and take control of their own finances. And when I view, when I first saw Bitcoin, it's like, it's 21 million. Everybody's like in their little castle or whatever. But what really inspires me about chains like Ethereum, they think in terms of the infinite machine. The entire world is your canvas. You can build any immutable app that is just as sovereign and can be built just as sovereign as the chain itself. And so, that still does get me excited. And it's really interesting to see how much the space has evolved and seeing all these new players come aboard. And that also the institutions make me excited as well. Like, I know like a lot of people may be more traditional, kind of reminiscing about the old days, but if we want to evolve and grow and have this technology make the difference that it can in the world, we have to build the rails for these institutions to come. And CAP is a huge part of that solution.
I love that. And I completely agree with you. I think that it's a common misconception that, adoption is a bad thing. It's like, when you find an artist and you get upset when they blow up. I think it's a testament to the values of this industry and what it's capable of doing that everyone is starting to adopt it.
Yeah, and I think every new class and every new cohort of participants, what they add and bring is vitality. And that's so essential for a lifeblood of any industry. I mean, I wrote about this in my lore building thesis back in 2025. Yes, you have people that are able to basically be shepherds and write the story of, their given community or given space, but they have to provide the feel for others to come aboard. And those people that come aboard will have to do it under their own volition because they're motivated to innately. And so I think like early on, there's more of there's something deeper, but as you grow into a bigger and bigger space, these new institutions, they definitely have more than, they have profit incentives, of course, but that's a pretty big incentive nonetheless.
Yeah, and it's the beauty of this industry, man, that the decentralized ethos includes everybody. So I'm so grateful, and I'm so grateful to the two of you. I know you're both incredibly busy gentlemen, so I have one final question for the two of you. So Lou, I'm going to kick it off to you first. What are you most excited about right now? What's going on for the second half of 2026, and what can we look for? Maybe some alpha for Franklin Crypto.
Sure. So things keeping an eye on really proliferation and still experimentation of agentic workflows and activity within these internet native capital market ecosystems. Back to Dave's comments on the adoption theme, I think we do see in cycles that, adoption sometimes has a tendency to flow with price action. And for the last, post October of 2025, it's been a challenging environment. We see agents as having the potential to be a, you know, really pour gasoline on the adoption uh, side of things and activity on chain. So something we're keeping an eye on there. That is really the primary focus. And then, you know, everyone kind of wants some clarity, right? And it
Mhm.
tough to say if that's going to happen, but I think that's going to be, an accelerant of institutional participation in the space that really has the potential to move beyond proof of concept and represent real scale.
Yeah, I couldn't agree more with you about clarity. That's really, it's going to be down to the wire, it seems like there. But for me, the things that I'm excited about, and I actually tweeted about this yesterday. Back in 2019, I remember in the depths of that bear market, everyone was pivoting out of crypto, trying to take crypto out of the name. There wasn't even an on-chain word at all. And then all of a sudden, DeFi summer came along and really kicked off the on-chain economy that we know and love today. I see a lot of similarities today, especially now with there's, a good amount of people that have pivoted out of crypto. They go to, robotics or whatever and whatnot. At the same time, on-chain still, not only is it still there, but it's growing, it's thriving. And my prediction is in the same way there is a DeFi summer, I think there's going to be some RWA season where you're going to see this experimentation that Lou talks about, but it's going to be built around RWA assets to, grow the TVL and the velocity of those assets in that TVL. So I'm really excited about that. And I feel like everything we built over the years in the blockchain stack, whether, it's making the L1s more efficient and gas optimized, whether it's making, smart contracts, easier, more developer friendly, every part of the stack has been built for eventually when RWA is poured over. And we've seen the results of this. I mean, look at Hyperliquid. Their most traded assets are not crypto assets; they're actually equities, commodities. And now you're seeing, a bunch of different private credit funds come on chain. And so it's only a matter of time until the entire world comes on chain. But how it comes on chain is still us to decide and still us to write.
Man, I couldn't agree more. And we could use some more clarity. So we'll see how that goes in the coming weeks. And we got a great conversation later today that's going to be talking about this with Anchorage and Plume. We're going to be getting into that. But gentlemen, I'm so grateful to Cap, to Franklin Crypto, and to the two of you for joining us today. Really grateful. And I look forward to getting to know you better and hearing more about you both and what you're building soon. This is amazing.
Thanks so much, Will.
Thank you so much.